7 Ways to Invest in Gold, a guide for investors. Gold has long held a fascination for investors, whether it was a 19th-century prospector panning for nuggets or a modern-day financial whiz scanning the computer for buying opportunities. Nowadays, you can buy gold in many different forms, from coins and bullion to exchange-traded funds and derivatives. But is gold a good investment? For many investors, the answer is yes, but you should first learn how to invest in gold. Keep reading to learn about 7 ways to invest in gold. Because gold prices tend to be less volatile than stocks, gold is viewed as a comparatively safe investment. People use gold and other precious metals to diversify their portfolios and to serve as a hedge when other investments decline in value. There are numerous ways to invest in gold. 7 ways to invest in gold. When it comes to investing in gold, you have plenty of choices. Gold bullion is probably the most popular way to invest in gold. And unlike stocks, you can't buy fractions of a gold bar. Because gold bullion is so expensive, make sure you use a reputable dealer. You also should stay current on gold prices so you can choose the right time to buy. Bullion banks typically deal with large quantities of gold, so their customers tend to be institutional investors and central banks rather than individual investors. Bullion banks typically offer investors a choice between allocated and unallocated gold accounts. It offers certain advantages over gold bars, including the following. That said, purchasing gold jewelry as an investment isn't always the best option because of the difference between scrap value and retail prices. For example, you might pay $500 for a 14-karat gold bracelet, but its scrap value is a fraction of that price. One thing to keep in mind is that gold coin prices don't necessarily align with their gold content. Prices on certified coins are influenced by their gold content and fineness, but rarity is also a factor. Gold derivatives can be traded as options contracts backed by physical gold. These options eliminate the hassles of owning physical gold, which might include storage, transaction fees and insurance. Prices can rise and fall faster than the price of gold itself, and derivatives trade on margin. Gold exchange-traded funds and mutual funds are a good option if you want the expertise of professional fund managers, though some are passively managed index funds that track industry trends or the price of bullion using futures or options. 1. Funds comprise nearly 1/3 of overall gold investments, even though they are a relatively new option for investors. ETFs are backed by physical gold and reflect the current price of gold in the market. One advantage of investing in gold ETFs and mutual funds is that they give you exposure to gold's long-term stability while also offering more liquidity than physical gold and more diversification than individual gold stocks. The main advantage of this investment is that the return is tied to more than the current price of gold. Gold mining stocks tend not to fluctuate as dramatically as the price of physical gold because they represent an investment in a company.